Okay, greetings traders. All right, in the next couple of minutes, I'll show you two repeatable entry setups using the variable index dynamic average, cumulative volume delta, volume bubbles, and the volume profile that tell you who's aggressive in the market and where the next trading decision is. Then I'll give you some clear entry rules and a discount code to try the entire package. Okay, let's dig in. Many traders will chase every breakout from inside a balanced area. They get chopped up and they still don't know if buyers or sellers are in control. They enter without knowing where the aggressive selling or buying may be and who's in control and what the bias is. This package is designed to solve that challenge. What this package is and how it solves this problem. There are four components to it. The variable index dynamic average. This is a new indicator we're introducing for the first time here. This will give us our directional bias. The cumulative volume delta, who's hitting the tape. Volume bubbles, also a relatively new indicator we've recently introduced. This allows us to spot large aggressive prints. And then a fixed range volume profile to find low volume nodes and to identify the point of control. Okay, let's take a look at the whole package here now applied to this 1 minute ES chart. I should note that I'm recording this on Monday, the 10th of November. I have now disconnected from data as that can be a little distracting. I just want to focus on the components here and the parameters, particularly in the variable index dynamic averages. This is a new indicator for us. This is not a new indicator. It's been around for some time. It was developed by Tushar Shandy. He's a very well-known technician. He's written many books on technical analysis and created many indicators. This one we liked very much for this particular template. It's relatively simple in its formation. I won't bore you with the formula. If you wanted to know the specifics of it, as some of you may, you simply go to Google or your AI and just type it in. You'll see the formula. But the name kind of says it all. It's a variable moving average that adjusts based on volatility. So there's some smoothing components to it. I don't know that it really matters. I think what matters is using it effectively here, and as you can see here, it is indeed quite effective for giving you the bias. Let's pop it open here real quick to take a look at the parameters. So here I've opened it up, and I'm going to highlight here the TDU VIDYA. Right, it's abbreviated as the VIDYA. Not a lot of components to it. It's the VIDYA length, the momentum, which is the Tushar Shandy momentum. He uses that for smoothing. And then the band distance. And what you're seeing here is this little shadowing feature here. It's pretty, right? It's I don't know that you need to have it, but you'll also note in here these little volume pivots here. These are often tied to fractals. You'll note here I have the native Ninja fractals on the chart just to demonstrate here from these pivot points. The indicator will draw a volume node here to give you a sense of indeed the volume behind the moves. Here, are we sustaining this move? Or in a case like we have here, when we flip, you'll notice here it flipping. These volume variables here now have been overcome here with aggressive buying. And like so many indicators of this nature, I'm going to go ahead and cancel that. It's not the break that you want. So if I were to grab this is not the entry that you want, right? You don't know how far that's going to come here, and you've just now changed the bias. It's the retrace you want. That's the trade that you're after here, and you'll note here as we come down, we stay within the shadow area here, the bullish bias, and then we take off from that and we leave behind this little volume print. And you'll start to see here now how it plays in with some of the other pieces here. But my suggestion is to start with the default settings. That's going to be a 1020, and 2 will be the band distance to keep you comfortably away from the price action here. Now that's not necessarily stop placement. It could be, but that's kind of up to you and your risk tolerance. You can see here as it breaks here. You have your stop down here. That may be too much for an ES contract, depending on your risk tolerance. But again, it's not the break that you're after; it's the retrace, right? So now the distance to the average is more manageable from a risk reward scenario here. And then as we get another push and a pullback, you'll get another volume node here, just kind of demonstrating, okay, this is very much a case where where buyers are aggressive here and pushing us higher, and we're staying comfortably above the line in the shadow. Now, you don't need to keep the shadow on. In fact, some of you, if you have a lot of charts open, Ninja occasionally will have challenges with graphics here. So I mean, this is creating a lot of lines here. That's not really Ninja's strength. So it can be. It's just as effective to remove the shadow. In fact, often what I'll do, I'll keep the shadow on. I'll show you here on a 15-minute here. I'll keep the shadow on in the 15-minute. It's kind of pretty, and you'll see here a pretty nice example today where we came down to the lower edge of it here on this 15-minute, and you know, that's I don't know if I could show you a better example of it here. We get a tick through it, and then all right, we stay on the long side here, and then now a pretty good move. Always a good idea with something like this to have a higher time frame. So if you're down on the 1 minute, 15 is not a bad thought, right? To keep that directional bias. So let's push that off for a second here. Indeed, I'm gonna pause this for a second. I'm gonna take off the shadow because it can cause Ninja to lag just a tad. So here you see it now without the shadow. You know, it's pretty, right? It's definitely pretty. Again, but do you need it? No. But you know, if you like it, keep it on, right? So, but just for our purposes here, I'm going to take it off. Now here, I've got a couple of things drawn earlier here. I'm going to show you these in pieces, and then we'll go back through the early part of the day, and we'll look at a couple of examples of some decent entries. I'm just choosing Monday, right? I never cherry pick the days. You can apply this to you know, most days. You're going to have opportunities that would be created through the combination of these components of this package, this template, if you will. So with that said, now look below here. This is our cumulative delta, the TDU cumulative delta. What's unique about ours is we're giving you multiple ways to view it. This is the way I like to do it. We're giving you the option of including a set of Bollinger Bands. I like this so the cum delta isn't just kind of floating in space. I like the idea that I can see the contraction of volatility here in the cum delta and then the expansion. And that's a 20 period simple moving average in the middle of the Bollinger Bands, which can be a nice filter in terms of what side of the market you may want to use that as a reference point in addition to the aggression here. I mean, you can see a couple of good examples. Oh, if I grab an arrow here, there's a volume bubble here. We haven't gotten to that yet, but many of you have seen the first videos we released when we introduced the volume bubbles. All of a sudden, volume bubbles are very, very popular because it's effective. We're showing here, and you can see it down here. You see the very aggressive volume. The cum volume delta, you can see the push down here, but what's obviously now, of course, in hindsight, we see the big push here from the volume delta. That's aggressive sellers that are clearly absorbed here, and whoosh, up we go again. Now we get the next retrace. That's buyers stepping in here to make sure we're not going to sweep that low. So one more notice here that, okay, per the bias, sellers are being absorbed. The next retrace, buyers quickly step in to take it higher. And then while we have our little volume bubbles going up as the trend continues here yet again, you see it's big bar here, big effort to try and pull it back, yet absorbed once again. And then much like we saw down here, absorbed. Aggressive buyers step in. Again, we see it here. That could be a note. Well, now that I turned this off at about 1:30. Now we get a little retrace here, but there's no aggressive selling here, and so we climb again higher. Okay, so we have all the components identified. The VIDYA per our bias, cum volume delta to see where the aggression is, who's in control of the market. Again, while the Bollinger Bands are optional, that's not a bad way to look at it. Again, looking for those contractions of volatility within the delta, which can be quite effective. And then so we get contraction, expansion, contraction, expansion, contraction, expansion. It's just over and over, much like you would look at with just the general price action. This is just confirming that, if you will, as we see the bands contract and expand, contract and expand. That's how the market moves. Okay, now in addition to that, let's take a look at the fixed range here. Now what I did was I went and drew this so to kind of make the points here. Here's the open. Most of the time I have the initial balance on here, but I turned it off here just so we could stay focused on what's included in this package. If you have our initial balance or Again, if you don't use ours, use someone else's or draw them yourself. You've got to know where the initial balance is. But I don't want to let that sidetrack us here. So I'm just looking at the overnight here, and all I did was just go back to the where this range started here, and you can see that. Look at the cum delta here. Right? I mean, it just couldn't be any more compressed. We get a little pop here, and you'll see that's reflected here, the big bubbles. What I want you to see here is that what we have here is balanced price action, right? I mean, we get a little bit above, a little bit below, but essentially just pulling from all I did was pull from this pivot across to the open. You can see. Well, here I should do it for you like this. All right, so if I grab the volume profile here, the fixed range, it's coming from our toolbar, right? So while we're focused on the fixed range as part of this package, you're going to receive the toolbar, and there's a whole lot of additional components in that are very, very useful to a trader. Some that are custom, some that are native Ninja. We're just giving you faster access to that. I'll put a link to the toolbar video if you're unfamiliar with all of the components that are in there underneath this video, so you can do a little digging on that if you're not familiar. But I'm just going to take the fixed range here, and from this pivot, I'm just going to pull this all the way over till we go into the open. And that's what I had. I think I had. It's kind of wide like that. The default here is set to 40. I'm going to take this down to 15 so we don't pull that all the way over here. So we can see here, okay, well we know where the value areas is, so fully balanced as we come into the open here on Monday morning here, and then boom, right? So here we see volume bubbles and the cum delta, as is often the case, not every day, but is often the case here, we get a big launch here, and just it's so much volume here you can't even see the candles underneath. Often the thought would be if the buy bubbles are so big I can't see the underlying price action, you might want to wait for that to settle down before you can see the candles. But that, again, very high volume almost always, right, every day on the open. So all I did was from that low, well, here I should do it again, I just drew the next fixed range volume profile, which is the advantage of this in that I can, let's get that low on that. Hang on. There we go. Get that. So I can see, okay, is this was climbing higher. Let's get the whole thing. As this was climbing higher, I established a new range here where I've got my value area here, 68%, right? We round it to 70. Many people round it to 70. You can set it to whatever you like, 68 or 70. So I know that, just for easy description here, 70% of the trading volume is up here in this value area. So what do I get down here? I get the low end of value, but I also, let's see if I can draw this here. You can set these here, but there's a low volume node right there. Right now, I think I have two low volume nodes set within this here. I should show you that here. So we can set in the low volume nodes the number that we want to use, the width, how many. We can bring this back here. I can set how many I want because I don't want too many here. And just for this example here, I'm asking it to show me 2 low volume nodes and a size of 1. Now, in this case here, the 2 low volume nodes are down below the market here. There's literally no trading there here, but it's not too hard to spot it with your eye. So we can see what happens here from that low volume node here. We come down and we put that pivot in there. There's an effort by bears here. You can see it in the cum delta to push it down. That's not necessarily where you would want to sit with a limit order. It's not quite what I'm saying. But as we see that reaction there, note the VIDYA, right? We're staying above that for bias. We're coming to that low volume node. We've gone just outside of the value area. So this being where the market considers price action balanced. Now we're below balance or below value. You might think of it that way. So the ES is on sale here, at least in this time frame here. There's an effort to push lower, right? It's absorbed, and off we go. Now, from there, what you might do here, if you've got that initial entry here, I would just pull it off to the side. Now I'm using the new price action here, and if I were to draw it this way, now I've just got a new balance range here, right here. So here, the market's very balanced. We get the retrace here. That's on sale. With a little push here, we're going to have a rip-roaring rager right out of the open here. We're going to trend higher for the day. Well, not so fast, right? There's an effort here. There's some big push here. You see that reflected in the cum delta here as well. Monster bar here. They're really trying to push Are we going to go up and get a trending day? Nope, nope, nope. Right, tries 1, 2, 3, 4, 5 times to attract new buyers up here. It's expensive up here relative to value and or balance. Here we're expensive here. No additional interest amongst bulls, so we roll over. Now here's a good example. This is you in hindsight you can look at this and go, well, couldn't I just short it here? Yeah, you could, or we're not telling you not to. It's just that's not, over time, that's not the best way to approach it. We would propose to you, let you do your own testing. We want, when we get the break, we want a push, and then we want something like this, right? I mean, this goes down pretty hard. We get little pauses, but there is the first significant retrace here. It's got a fair value gap here, and then we go down, we get a new low. So the point here is that much as you see this big push here, the VIDYA here, the dynamic index, is giving you your bias. Well, here, once we make that flip, I want to be looking for shorts. I get very wide bars here, leaving behind a big fair value gap, which comes back and gets tested. Oh, if you were looking at a market structure, you'd be fairly clear that this was an order block here as we push up before we get the very aggressive move down. So you've got your order block sitting right here. Again, whether you pay attention to that or not. But at that moment in time, as you'll note here, we've already flipped to the other direction. Now, again, this is on a 1 minute, assuming so many of you are day trading and working with prop accounts. We get a flip again. So yet again, the push here, as it pushes right into this order block, it's not the push here, even though, okay, right, that went pretty far. It's the retrace, right? That's the trade you want. Well, let me rephrase that. We would encourage you to look for the retrace rather than the breakout, right? It's just statistically you're going to find a better experience with that, because this is a pretty aggressive move here. I mean, where did we go there? That's from the breakout here to the top. That's 50 ticks. Works out this time, but over time, we would encourage you you're looking for the retrace that stays above your bias line here of the VIDYA. That's what you're looking for. Even here is another retrace. Some of these are going to be, of course, tied to the measured move algo here. So we get a pushback. We get right into the pocket between the 50 and the golden zone. So that would be an area of interest here, particularly with the volume bubble, to support the idea that bulls are stepping in here. We get on the other side here. You do get a little contraction of volatility. If I get that high, you see some of the advantages of that toolbar. We get that little contraction of volatility here as we go sideways, but the bias keeps us on the long side. So if you were tempted, right, oh God, I'm in good shape here, or if you were looking at this, going, okay, they've swept that. Isn't that a break of structure or a change of character? Shouldn't I be anticipating the retrace? Well, yes, you want to be anticipating it, but it just keeps climbing higher. So out of this little contraction here, which is reflected in the Bollinger Bands here, as we push out, right? You'll notice it's quite effective. Once we get out of the Bollinger Bands, we'll almost always come back to it. It can get out pretty far. Right? We see here, this is a pretty big push here. We get out of it, but then always back to it. So there is that reversion to the mean within the delta, same thing, or the cum delta, the same thing happening here. So as we push up again, you can see how these all start to play together. This would have been, again, the same thing. If I'm just using native ninja rather than get into a whole measured move idea. But here, again, back down to the 50. Bias is still high. We've got the cum delta here is reflecting that aggressive selling here, but it's being absorbed, and then we're back over. You might have looked here. So and we get on the other side of the 20. We stall right here as we break the pivot here. What are we going to do? We're going to retrace, right? We're going to go higher. Turns out we just continue to grind higher, and it turns into a pretty nice day. Let me take that off for bulls, right? And that bias is kind of guiding you the whole way. Same thing, if you're over here, you always want to be checking that one time frame higher, 15 being a good choice for a 1 minute. And you see here, we tested the low here, boom, boom, boom. All right, it's just a pretty aggressive day for the bulls, well in charge. So now you could do the same thing. Let's put together a couple of specific entry templates here that we discussed in the opening little text section here, and let's go through them one at a time. Here I've drawn a few sections here just to speed this up. Now we can see, of course, as we were looking at previously, after the initial launch here, that's what I'm looking for here. The market finds balance up here, right? So we go from balance in the overnight, imbalance, right, is price discovery. We're pushing up here to see if we can find a new value area. We do indeed find a value area here and a balance up here. And then as the market tends to do, we move from balance to imbalance here. So we get an impulsive move down, new price discovery here. We can't sustain up here. Buyers lose interest, so down we go. Market gets put on sale. And then we can look here again. We see that the market now finds new balance, right? Of course, being the focal point being the value area here, again 70% of the trading volume. So we get a range here within this value area here. We're a little out of value, a little expensive, below value here, on sale, back and forth, and then as it's prone to do after we come out of this balance here, you'll note down here I've just drawn from the low to the high as we go here. Here's the balance at the low end of this. It's almost a continuation. You could just carry all of this over here, but the reason I'm drawing it on this section is here as we move out of this balance area here, we break the VIDYA here. As we flip it, now we know our bias is long, but we don't want to chase the market here on this break because, of course, there's no way of knowing right at this moment in time if we're going to do this and then just head to new lows. There's no way of knowing, so we want to try and be mechanical and methodical about how we approach our entries. So we've had this attempt now here to sustain value here, but the market now pushes off here looking for new value here. So we get an impulsive leg. So the idea being here, I want to draw and identify balance area, but then when I'm pushing out of balance here, and you can see it again reflected on the low end here, as we push out of balance here and we come back to retrace, we're coming back to test that value area here. Now, we want to look for those low volume nodes, and you can see, I mean, this is a pretty good example. It's maybe a little tricky for you to see it, but if you look right here, you can see that low volume node. There's no trading takes place, and that we get a little gap as it pushed, literally as it broke the VIDYA. Let's get that right in that pocket here. There's the low volume node. If I pull that over, that's the exact low that we hit. Now you'd be looking here and you'd see that big red sell bubble here, and would that be your entry? Well, with practice and screen time here watching this, the idea here that we don't sell off here and our bias stays long, again with a lot of screen time watching this, you might identify that as well, that clearly that's absorption here. Bulls are taking this out. Now maybe you're looking at a footprint or something else would recognize that absorption. If not, just sitting here on our 1 minute, well, as we looked at earlier, the push and then the retrace, now here everything's in alignment. We know the bias is long. We've had an absorption here as we came down to test the value area. We get a push higher. It does not appear like we're going to do this and go deeper as we see buyers stepping in here. We see the volume to support it. It takes a minute, as you can see in the cum delta. They're not sure here. We break that pivot. Okay, what are we doing? We go sideways here, thus the contraction in the Bollinger Bands that are around the cum delta. Another effort absorbed, another push higher. Here's the volume as we see it over here. 2.37 thousand contracts get traded here, and we push higher. So all of the sells are being absorbed, and the buys are just pushing us slowly, but pushing us higher. So the ideal entry here would be right here. Right now, as to whether or not you can take it, well, if you're trailing behind with your bias, I mean, you've got to, you're probably done for the day with that trade. I mean, that's going to be. Now, could you stay through all of it? Let's just assume a lousy fill. If we go to the high, well, there's $1,500. Let's assume you took it to up here. You started to identify. It looks like the market is finding new value here. So let's assume the worst fill. Well, there's 962. And you would want to do the same thing here. So let's with that, as a pull that off here as an ideal scenario here. I'm not taking the tick high or not giving you a great fill. That might be something for you in terms of just watching this, but we can see what's happening up here. So if we did the same thing, I'm going to grab that fixed range here from the low, and I'm going to start pulling up here. I'll pull to that high, and this shouldn't be surprising here. Now we've established a new value here, and the point of control here is right where the market stalled. So if you were drawing this, just kind of eyeballing, okay, well, looks like this is now we get steeper here, but the bulk of the trading is up here as we see high volume node and the point of control here. Are we holding here, or are we going to keep pushing and go a little further. We go a little further, and at this point here again to where I turned it off at about 215. Well, now we're getting a little push here. We get a little bit of expensive, and we're coming back to value. So there's a return to the mean here, kind of approach here as we push outside. There's not enough interest in buyers, so we come back to value. So we get a little expensive here, come back to fair value, and then a push again. So that kind of gives you an idea. Now some of you may be looking at this going, whoa, what's on the left here? Well, that's all the delta, so we can see where the aggression is, and this can be quite useful if you're looking at areas and you're considering an entry, because we can see, for example, if I were to use my arrow here, we see this section here where we have very aggressive selling. Well, of course, that's going to be tied to that volume bubble here. As sellers, we're trying to push it down right here. And then we look at the cum delta here. They're trying to push that down. What do we get here? Well, you see the low volume node here, suggesting that if they're going to push this down, they're going to have to break that. That would be a nice entry here because there's no trading here. So if we're going to go down here, that might have been a place where you might have anticipated. You don't want to just react because you see that big bubble here. Again, take note of what your bias is. You're looking for longs per that bias. So as we move higher again, looking, okay, we've reestablished value. Again, as I drew it before, we're back into balance. So we go from balance to imbalance, balance to imbalance, balance to imbalance, balance. Well, we'll have to see where we can look. Oh, I'd have to reconnect to data. But I think you get the idea here in that there's a lot of value here in looking for the moves outside of balance or fair value. Let's get this one off here as we move outside of that range. And then we reestablish value, right? As the market is balanced to imbalance to balance to imbalance, right? That's how the market moves. And so this can be quite effective. Now, let's take a look at the second trade entry setup here. As we mentioned, we'd give you 2 today. I'm sure you can probably look here and see more than 2, but let's have 2 very clear examples that we can demonstrate that this template offers you. Okay, here's another example here. I reconnected to data, so we go out here to there's another about 20 minutes before the close. But just to show you that you can do this on a smaller time frame, or a smaller scale, I should say. So here's the low I'm pulling from. We get a push and a retrace. Well, within all of this, here as we look at the cum delta down below, we're drifting lower, but we do have a very clear balance area. So we can see the fair value here. We're getting a little bit hot, a little bit cheap, but essentially we're balanced here, and the contraction in the Bollinger Bands around the cum delta is kind of supporting that idea. But then we get a push out, right? Here's the push. We're trying to break to new highs. Eventually we do, but where's the next trade, right? We're looking for a setup here. So we're pushing outside of value. So what I would do here is we'll take that one off. I would use this pivot low here. That's why I like to have the fractal, and that's where the volume was identified here as buyers taking control again. So I would go back to my fixed range here, and I'd pull from that pivot to that pivot high, because this becomes let me get that right on that low. This becomes our push here from this balanced area here, and then yet again we get outside here. If I open this up, so you can really see that. Come here. All right, so here's our clear value area here and our point of control right in the center of it here. There's a push to take it higher here at this section here, and that's about 2 o'clock. So this is the push I'm talking about here. You can see the effort to try and take it higher. Get you back there. There we go. Where's my arrow? All right, so here's the push, right? We get outside of the value area here. Is this a breakout? Are we going to do it? Can we attract new buyers here? No. We come back into the value area, and what do we do right here? There's your low volume node. We come literally right to it, to the tick. You might, this is what I would do. I would certainly be checking the fibs there. What do? We come right to the 618. So pretty nice example. You can't even see the low volume node here. Well, if I were to draw it, because the 618 is sitting right on top of it. So you come right to it. What a beautiful setup here. Now, how much is there? It's more. It ends up being more of a scalp here. The big volume bubble here is kind of a hint. Even though we do break below it here, it's absorbed. You see the cum delta reflecting that big volume bubble here, shows us that bulls are buying here. We come down to this lower point, tap the 618, and then what do we get there? There's another 26 ticks. $325 out of that. It's a push. We come right back to that value area high. Again, there's no interest amongst buyers, so they have to come back down. So you could, in essence, just if you wanted to, just pull that right over to that high, and what you see now, we're coming to the 50. We're good on the low high, right? So we come, here's the golden zone, we push, we don't get to target here on the measured move target, we come back to the 50 here. We're outside of value, so you could think of, okay, it's cheap here, relatively speaking, expensive here. There's no volume bubble here, but I'm clearly, my bias is not uncertain, so I know I'm looking for longs. If you're not taking this one, it's the pullback. You don't necessarily want to be waiting for a volume bubble. That's, we have these. That I wouldn't not take a trade like this or like this because I didn't have a volume bubble here, but that's your personal preference. You may choose to wait until you see those high volume bubbles demonstrating that there's aggressive interest there. That's kind of a personal preference here, but I wanted to give you two examples of pushing from a balanced area to an imbalanced area and then looking for that retrace, and then here being from balance, attempting to break out, can't do it, it comes back into balance. Often you'll find those pivots, right, particularly in the S&P, well, I mean really for any asset, are going to be very much tied to the measured move, right? So we go to a 50 or a golden zone, and then here target ultimately gets hit. You could do the exact same thing from this pivot here. It's the last time we go up all the way through the pivot high. Now we get a point of control here. We'll be curious to see how the day ends. But some things that are really useful here. So here's the point of control here. This little pullback here. What do you see it? Let me get the arrow. Do you see the low volume nodes right here? There's two of them right here. That's right, what we pull back to. This little retrace here, you see it reflected in the delta. In the cum delta, we come right back to the low volume nodes. Kind of handy to have that. Well, here, if I take that off, now you can see them. There's two of them side by side. We come right to the edge of it, and then there's the push. Now, there's no volume node here. So, again, up to you, right? If you don't necessarily need to wait for those. That's just an extra, little confirmation here. But it's not always going to be to the tick or the tick high or the tick low. You can just see that buyers are stepping in here. You don't get it demonstrated by a volume bubble here, but certainly the low volume node here, the bias, the cum delta, if you wanted to wait till you get on the other side of the 20, that's another choice. From here up to that high where we get a new value area here. So if you were drawing it, right, you can just visually, right, kind of see, well, there's the new value area. Here's my point of control. The ideal trade here is right there coming out of that low volume node. Bias still intact. So the ability to just grab these and draw the fixed range volume profile, incredibly powerful here and so useful, particularly with the delta on either side. So we see as we come down here, you can also, if I get that arrow, you see the bullish delta here. The buyers that are here, that's right where they're stepping in. It happens to be where those low volume nodes are, so you have buyers that stepped in here. That's what pushed it higher. These buyers, there's a fair value gap that produces the push to what ends up being the point of control, retrace back to low volume, and then from there we get the trade you're after right there. Right now, would you have known to take it up here? Not necessarily, right? So wouldn't have been a bad scalp to just take it from. Let's get you off of there. Get you out of there. Get you out of there. Let's see what was there from this entry. Let's assume you're not going to get a perfect fill. We get the fair value gap here. Just the point of control, there's another 15 ticks. Point of control keeps going when we get a new high. So that should give you a few things to work with. As is always the case, we strongly encourage, from any video we've ever done, we really want to encourage you to do a trial. That's why we give you the 7-day trial. So you're going to get a minimum of 5 trading days so you can do some of this yourself. During market, after market, go back and look, right? Go look for those areas of consolidation or balance, and then as price discovery takes over, we push through imbalance to a new area and look to establish a new value area. And then if we can't sustain, look for that retrace, all the while keeping your bias intact, right? Via the VIDYA showing you what side of the market you want to be looking on. All right, and then just a reminder, it's not the break that you're after. It's the retrace, right? It's the break, it's the retrace. That's the one you're after. So this is I think this would be a good example of one to look specifically for the break and retrace. And then the second would be pushing from value to impulse or price discovery or imbalance, and then a retrace back into value, right, or balance, and then looking for that trend continuation, right, with a focus on the VIDYA for your bias. Okay, that should give you a number of things to work with here as you consider putting this package together. Right? You don't necessarily have to use these particular pieces. This is just an effective template. My partner TDI Dev, or Erwin, as many of you know him, this is one of his current favorites. I've just watched him absolutely kill it with this in the NQ. He's really a big fan of this, and so thus encourage this template to be put together and offer it as an option for you guys. So what we're going to do is offer you for the next 48 hours, we're going to offer you 40% discount on this package if you bundle all 4 of them together, all 4 of these pieces, that being the toolbar and all of the components. We've just looked at the fixed range, but there's many other components here. Again, a link to the toolbar video will be below this video in the description. Cume Delta, VIDYA, and the volume bubbles. All right, so that's the package. All 4 of them, you get a 40% discount. If you already have some of these, or you have your own Cume Delta or your own fixed range volume profile, or whatever the case may be, if you wanted just 1 or 2 of these, again, for the next 48 hours, we'll give you a 20% discount on those. Those discount codes will be below the video. If you're not ready to make the investment, that's okay, right? We understand. In fact, we encourage trials. You can do the trial. And we're doing this at the 10th of November. Black Friday is around the corner, so that might be another way for you to get some savings on this as we approach the end of the month. Okay, with that, I'll sign off and wish you good trading.